Welcome to Cambridge House Live. I'm Bridget Anderson. I'm joined by David Morgan, the publisher of the Morgan Report. Nice to see you again, David.
Thank you.
Let's start off talking about last year. It was definitely a tough year. Tell me, when you look back on 2013, what lessons did you learn?
Well, I think the first thing I can state is, silver I think was the worst performing metal, certainly in the precious metals regime, if not counting the base metals as well. I think I learned something I already knew. It wasn't anything new for me, and that's that all markets go up and down. And within the context of a secular bull market, which I firmly believe we're still in the precious metals, that you can have these lulls that take a couple of years, and that it usually washes out what I call the weak hands. We saw that in the first bull market. I'm old enough to have been through one complete cycle already. And in the 1965 to 1980 bull market, you saw a lull in the gold market. It went from 35 to roughly 200, and everyone was pretty euphoric. Then it fell back to 100, and believe me, a lot of people left the market and had given up. It finally worked its way back up to 200, and a lot of people actually thought it was a double top, and that was as high as it would go. It went up 4.5 times from that price. So I think we're going to see something similar here, but it's a lesson in investing. And also diversification. As much of a silver bull as I am, as much of a gold advocate as I am, I've never stated this is where 100% of your assets belong. I've always recommended somewhere in the 10% for most people, to the people that really study and follow the market, maybe 20%. And every now and then I'll even get a call asking me, well, geez, I wish I would have learned that about you before, because I decided I was going to, go all in. So it's a lesson in several areas.
Well, you say that, this is a lesson in investing, and perhaps you've seen some similar cycles like this. Has your investment approach changed at all then for 2014?
Not really. I think that since I specialize, I like the energy sector, for example. I think everybody should have some energy situations in their portfolio, but I don't really recommend them because I just don't have the time or the staff to delve into a lot of those things. But we do look at the broad resource sector. It's not just silver. It's silver, it's gold, it's copper, it's a lot of things. We've looked at a lot of resource sector situations that we find valuable. So we continue to explore that area, try to find value, and that's our main focus.
Well, how do you try to find value given the market is doing what it's doing right now? It's a pretty challenging time.
Well, we've stressed a lot on the royalty companies. We like the streamers because they're not so dependent on the price of the commodity. They're more dependent on what their margins are. So, for example, I had a consultation with one of my members, have been a member a long time, and we do speculations because people love them, and that's what the main part of our industry is. Most of the newsletter types specialize or advocate these little small companies, which I try to avoid for the most part, but we do handpick a few, and it's part of the deal. Regardless, we like to stay big money in big situations, big money in big companies, and this guy said, I really wanted to buy a lot of the juniors that you had with more money than you recommend, money you can afford to lose. But I did what you said, and I am so glad that I did, because my portfolio is only down 20%, and I know that my friends that are in the sector are off substantially more than that. And that's not saying that's true of everybody that is a member of the Morgan Report. Well, what it is advocating is my conservative approach to the sector. But everyone had losses this year in that sector.
For sure.
I won't deny it. Silver underperformed all the metals. I won't deny that. I think 2014 we're going to do much better. Well,
and you were saying that you see the prices starting to climb in the first quarter. So are you seeing that now?
Well, we've built a base. I've already called the bottom of silver. Right or wrong, I've called it. I said it happened June 28th, 2013 at 1817 on an intraday low. There you have it.
Okay.
We've been above that for more than 7 months. I think the basis is built. I think we're going to start coming up in the first quarter. And I'm looking to kind of revisit everything we lost in 2013 to be reestablished in 2014. So let me explain. We started in January 2013 at $32 silver. I think I'm going to see $32 silver by the end of 2014. Gold was at $1,700 in January of 2013. I think by the end of 2014 we'll see it back up to $1,700.
And what do you think is driving that price primarily in 2014?
I think the realization that this fundamental fact that the global economic system is still under stress because of excess money printing is going to drive people back into the real asset sector, particularly the precious metals.
Even though there is some easing off of the quantitative easing?
Yeah, I think that's more of a sideshow to kind of make America look a little bit better, like we have some fiscal responsibility, when all in all we really don't. In fact, I went through that in specific detail in the Morgan report for January, explaining that this 85 billion that's used as a figure is really not what's accomplished. It's more like 100 billion per month. And I go through it, I don't have time to do it here, but basically I think it's a ruse, it's a sideshow, it's something to distract the audience saying, oh wow, look, they're showing some fiscal responsibility, when all's done at the end of the day, they're not doing that at all.
Well, and there's a lot of people that would agree with you that say that there's a whole lot more worse to come on this front too, and so you're obviously in that camp.
Yeah, well, there's good and bad in life, and there's one thing's going down, something else can be going up, but the overall living the lie that we could print our way out of this is a lie. And I think more people are going to realize that and come back into the precious metals or establish new people into the market. And that's what I really see this year. I think you see people that were on the sidelines or never heard the gold or silver story wake up and seek what's going on, and they'll move into this market, and that's going to take the market up.
I just want to stay with the U.S. economy just for a second, because it's something that you and I have talked about a number of times, and a lot of people saying, yeah, it's going to get a lot worse, and hang on, everybody. So what is the timeline that you take a look at and say, things are going to get worse, and we need to be prepared for that? Are you a person who looks at, a couple of years or 5 years?
Really great question. I'll try to be succinct. A lot of people, and justifiably so, have said, you guys, we'll put the newsletter class in there, the doom and gloomers, if we can characterize it that way, have been saying this for a very long time. I mean, I can show you a book called The Coming Currency Collapse, talking about, things collapsing by the mid-'80s or the mid-'90s. Okay, well, we're, decades beyond that, and it hasn't happened. And so I went back and checked the premises and said, look, everything in life has a limit. There's a limit to how many times you can bend a wing before it breaks. There's a limit to how much paper money you can print before it has no effect. We have reached that limit. QE1, QE2, and QE3 have not worked. We continue to print money, but it does not stimulate the economy. Certainly not to a level that it used to under the Keynesian model. So now that I know that the limit has been reached, I can project more accurately how much longer it might last. My projection, 2016. I think that's about the time the wheels will fall off.
Yet you're seeing, to go back to your answer a few minutes ago, you're seeing more people come into the market now who've been on the sidelines. So what's encouraging them to get back in?
I think just common sense. It's like, look, things aren't right. The political rhetoric is ridiculous. It's the 1984, the Ministry of Truth. Freedom is peace, freedom is slavery. I mean, this stuff is ridiculous. People are waking up to that, and so they're asking themselves, they're coming back into self-reliance and saying, what can I do on a personal level to protect myself or to save, keep my savings or what? And so they start to do a little research on the internet. It's extremely easy. They start to hear the gold story, the silver story, the natural resource sector, commodities, that type of thing. So, it makes a lot of sense that I get into this sector. So I think, and with the social media, it just takes one very popular, guy or gal out there to say, I'm buying gold, and all of a sudden, being that whole, age group is like looking into it, right?
Exactly, but you're a fan of the technical charts, so what are they showing you? I mean, obviously you're not the one who's watching Twitter and Facebook and things like that to make your decisions.
No, the long-term bull markets are still intact. That's the most fundamental thing. I've done so much in the technical area, and I do very little there now, although I still use it, and I think it's valuable. But it's a tool, and that's all it is. But the most basic part of technical work is still, I think, the most important. It's like football, blocking is still very important, so is tackling. Same thing in technical analysis. It shows that we are still in a secular bull market for both gold and silver, and that's the most important fact you can get from the technical work.
So any particular advice when it comes to silver, what you're looking for in 2014?
I think silver is going to be a good year. It'll probably outperform gold on a percentage basis. I'm not looking for anything spectacular this year, with the caveat that there is, black swan events that could happen. So this could be the year, but I doubt it.
And what about gold then?
Gold as well. I think it's going to work its way back up. Like I said, probably over the 1550 level, probably 1700. Nothing spectacular. There will be days, and there'll be lots of news, and there'll be days that, oh my goodness, this is it. It's taking off, and only to disappoint, but generally moving higher.
Okay, and just overall, when you're talking about your approach to investment, you advocate for not keeping too much invested in real estate or any assets that you can't easily liquefy. So tell me a little bit about your approach there.
Yeah, I'm very influenced by Harry Brown. Harry wrote several books, and he has a permanent portfolio. He's big on liquidity, as I am, so everything that you have outside of your personal home. I'm nothing against real estate investing, by the way. It's not my expertise, and I just don't like things that are liquid. And his permanent portfolio is probably one of the best approaches to investing I've ever seen and witnessed through the years. And it's for inflation, deflation, it's for all scenarios. It's weighted between bonds, precious metals, stocks, the gamut outside of real estate, all liquid investments, and then you rebalance it every year. And it's really, the more I witnessed it for the last 25 years, the more genius I see in it. It's like, how could he be that good?
So a real influence on you for sure.
Absolutely.
Yeah. David, thanks very much. It was nice to speak with you again.